Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Monday, August 19th, 2019. I figured it's a good time to do a video right now. I wanted to kind of get my thoughts out there, what's going on. I think we're at a pretty important point right now, technically in the market. So I'm going to go over the charts, and the video helps me share my thoughts. Okay, just start out with some of the charts I posted this morning. You have QQQ and SPY, both, well, QQQ I should say, hitting the top of the bounce target zones. Now for those that might not have been with the site or at least not logging on, these are the bounce target zones I laid out back when the market bottomed right after the August 5th bottom. So at that point in time, I had a target zone which was the top of the gaps from 183.52. I'll box it in for you, all the way up to 183.37. So that's what I call my max. My bounce target zone, my max bounce target. So 183.37 on QQQ, and then SPY was, well, this is where we're at now. That was then. So remember, we've hit that target now. We hit it once, pulled back, slightly overshot it on a momentum fueled overshoot with a divergent high, went back down. And now, as of this morning, this was this morning's post, but we're still right about there. Right there, again, 188.37. It's hard to even see that green candle because it's so small. We gapped right up to it. And so far, that's contained the bounce. As I said Friday, I'm not crazy about the fact that we're back to that level a third time. I'm going to jump out to the daily charts here in a second. And but again, like I like to say, resistance is resistance until unless broken. And also, the more failures, the fact we're there, if we fail again, it could open that door for the quick move down that I'm talking about, the next leg down with impulsive selling, because that will just show that on every attempt that we've gotten there, the bulls have failed to take that level out. Buyers have stepped away or dried up, and the sellers overwhelmed it. So it hasn't happened yet. I think, again, I wanted to get this video out because I think right now this is probably the most important technical level we've been at least for the last week or two here. Because again, we had quite a few check marks, but we never undercut those lows. That would have been very important. We've yet to take out those lows. That would have been my final check mark for the next leg down, and so it still may come. So again, that's the QQQ charts, and I did the same thing for SPY. SPY had potential bounce target up here. 294 was the top uppermost bounce target. This was again back right after we bottomed there on the 5th. Posted this chart, and that's where we were today. You can see SPY has actually lagged behind. It's everybody buying the FANG stocks. Let's say those are the beloved Apple, Microsoft, Amazon. Those have lifted the tech-heavy NASDAQ index up more so than the broad market. And again, this is S&P 500 is much more representative of the stock market. 500 companies among a lot of 11 different sectors. So that's it. Now we're still, like I said, some more upside. We haven't yet come up to that 294 level because SPY has lagged on this bounce up, but we've had the 1, 2 so far failures there. We're still in that bounce target zone. Still anybody's game, like I said, until we take this out or the top of those levels. And so, well, here we are in a pretty big sideways grinding period. And again, that's a little bit unusual. Now I'll jump out to the daily charts and show you what I'm talking about here. All right, so what I mentioned on Friday, the fact that we're once again up towards the top of those consolidation ranges, it's just not ideal for the bearish scenario because, as I said, usually during these corrections you have the initial leg down and then a kickback rally like this. Snapback rally, and once it runs its course, you head down to the next one. You can see it, along the way here. Here's another one, another correction similar to the one we just had, and I'm saying similar to the first leg down. Little corrective period for about a week or so, flagging type action, and then another leg down. Whereas this, as I said, we've now been moving around. What is it? About 2 weeks. 2 weeks in that range. So again, until we break definitively up above or below it, it's still anybody's game. There's the top of the range, there's the bottom of the range. It's a pretty big range. From the daily chart here, since I'm on that, we had a breakdown in SPY Remember, we broke down, back tested, and we back tested a couple times, and we're still below that trend line. On QQQ, it's not as clear. On QQQ, you had that trend line off the lows was breached intraday a few times. For the most part, we closed back on or above it, and we're still above it there. So like I said, it's anybody's game right now. We had the big divergent high, which this tells me with a pretty high degree of confidence that whether we pop up above here or not and go on to make another marginal new high, there's a big drop coming. Right now, I'll tell you the things that are giving me pause. We're curling up here, poised to make a bullish crossover on the PPO, but we haven't yet made it. This is a bullish crossover when that orange line, the PPO line, crosses above the signal line, and a bearish crossover happens in reverse when you cross down below at the top. And what you have too is clean separation. Sometimes you get in these trading ranges, stay away from using crossovers as trying to use them as buy or sell signals when you have low volatility, low compression. I like to see clean separation like this. There's a clean crossover with bullish crossover with clean separation. There's a bearish crossover, and again, they're just to help confirm where the trend is going. So that hasn't happened yet, and again, with the negative divergences at the recent high, I still strongly favor these targets being hit. It's just now we've come in and foiled what could have been a breakdown, take out the 200 days, and the next flush down. So we're having this consolidation period. It means that the sellers so far have not been able to overwhelm the buyers and take it down below here, and it's as simple as that. So and also a little more complex because right now we're in this trading range, again, unless it's resolved. So let's watch that. I posted this morning that we had what I believe to be objective shorting ops. Here, let me go back to that same post I was on. Let's go back to here, and remember, when I put up these front page posts, like for example this one, the emails went out, I got these charts out to you, and then I added the original charts there, and then down in the comments section I updated this, and I said here that NQ, the NASDAQ 100 futures, were starting to crack below the trend lines, but as I said, what you want to see is to minimize the odds that this will be a whipsaw signal. Let me zoom in for you and show you that chart. There it is. You can see we're just below it there. We have yet to have a bearish crossover on the PPO right there on NQ. So we go back there. ES was starting to crack below, as you can see, and ES did have a bearish crossover, but I always say you want to see both of these give way. You want to see the NASDAQ 100 futures and the S&P 500 futures both break below, and again, it is common here. When we zoom in here, I'll give you an example. There's this little candle right where my plus sign is, right here, this little thing. You can see there's an intra-period breach. This is a 60-minute chart. As such, your sell signals come on a 60-minute close, especially a solid close. Here's an example. This candle right here, it popped below, but then it snapped back above, meaning the body, the fat part of the candle, closed above the trend line. So that's an intra-period break, just as this was. Those are whipsaw signals. However, the following candle was big, red, impulsive, and a solid close down below, this one right here. That's a sell signal right there, or at least a break of that trend line. And so what we had here, as I said, these 60-minute candles were still in progress. Remember, they're going to be finalized. I screenshotted this at 10:13, so that candle would be finalized at 10:30 a.m., 1 hour after the market opens. So let's look at that. I take that back. These are 60-minute candles on the future. So when I put the crosshairs here, let's see, I get that pop-up box. This candle should be finalized in a few minutes at 11 p.m. now. But what I wanted to show you, if I take it in tight, there you can see there's that what I'm talking about, a whipsaw signal. But not really, because you have to wait for that 60-minute close. So if I zoom in real tight, you can see that this, since I posted that chart, this is where we were. See, we reversed. And so right now, with about 7 minutes to go before this candle is finalized, we're poised to close right above and right back on that 77.22 support that I pointed out this morning. Cap that candle, cap that candle. There was an intra-period breakout, again a false breakout. You'd wait for the 60-minute close. We closed right below it. And now if you zoom in really close, it might be hard for you to see in the video, because these are small candles. We're right on there. We're going to print a doji, right on or about there. A few minutes left to go, but that's that. So what I'm trying to say here is that's not a confirmed sell signal, and that's why I said best to wait and see that's either a very solid move. Sometimes you don't have to wait for a 60-minute candle. If you see a big move down like this, where a reversal all the way back up there, and of course how much time is left on the candle. If that happens right in the beginning of the candle and you have almost an hour to go, maybe you get that reversal. If you've got 10 minutes to go and you're trading down here, you're probably not going to get back up in there. Best you're going to snap up and have a back test. So that is, we're still pending those sell signals. That's NQ. And here's ES, same story. I'll zoom it in tighter for you. There's the trend line, a lot of reactions. There's your intra-period break. But so far, with just now about 6 minutes to go, we're back above that trend line. Now, doesn't mean it's not going to break. Could break, but it may not. Like I say, support is support, and unless broken. And you can see ES has some resistance above there, which probably comes in. This should come in right around the top. Yeah, it will. Right around the top of that bounce target zone that I gave you on SPY, because remember, SPY already hit that bounce target zone twice that I had from the beginning of the month. And if it comes up a little more, that would give it a third time. And what that may do too is that would mean a little more upside in ES. We're looking at the futures here. But again, if ES goes up, SPY is going to go up by the same amount. And so what that could give us, let's just say that ES does run up, make another run at the top of that bounce target zone, which is again resistance. There's a lot of failures there. NQ would then pop above, and if ES reverses there, then that pop above an NQ, which I'm not showing you here, this is ES, would prove to be a false breakout. So those are all the things I'm watching right now, and that's it. So until and unless these trend lines go and they go with conviction, the near-term trend is bullish. But as I showed you this morning on those charts, and we'll go back to the QQQ 60-minute charts, you have actually I showed it to you on the futures, my bad. We were on NQ this morning, and I showed it how we have some overbought conditions. If I put a horizontal line up here for you, you can see that pretty much every time we get up to about this 80 level. Now overbought is typically anything 70 or above on the RSI is considered overbought, but that's typically. So what I like to look at, every security is different. Every market condition is different. What I mean by that, okay, so go back a few months ago when we were just, slow chopping up. Actually, we'd have to go back. This doesn't go back much farther than that. But if you look at a security, and in the 70 levels right here, and you see the RSI goes through the 70 level all the time, and the security keeps going, don't consider 70 overbought on that security. It's not worth. So I use my own overbought oversold reading. 70 is generally accepted, and usually on the daily charts of the indexes that'll work. But as you can see on this 60-minute chart of NQ, the Nasdaq 100 futures I'm showing you, that the overbought level, if you want to use it to either confirm, I wouldn't use it as a buy or standalone buy and sell signal, but an indication of, hey, when are prices likely to reverse? We go in and we highlight every time that we touch that level, and again, you can move the line up. It might be 82, 83. You can see, as I showed you before, with very few exceptions, if any, when we get to that level, you have a correction, and that's where we're at today. At the very least, the risk reward to going long is not very attractive. So again, what that means is maybe we break out here, maybe we don't reverse, but to go long on that breakout while you're so overbought increases the risk that it's going to fail. So if we go much higher, and again, we have a lot of things coming in together. We have a pending but not yet confirmed high level bearish crossover on the PPO. These lines, if they cross, that was our last bearish crossover. It came right after that last overbought reading. And again, most importantly, I put price first. In my book, price comes first. Volume indicators, overbought, oversold, distance second. They all play into it. So let's just keep it simple. These are the lines I'm watching right now. If we do break them, is it an impulsive breakdown once they break? And is there follow-up selling? That can, tell us, give us some clues to really what's going on in the market. If it breaks down, we have a whipsaw, and then we move up. Well, maybe the buyers are in control right now. So we'll see where this goes. Yeah, and as I look at this chart before we move off it, there's another example. Here's a uptrend line, very well-defined uptrend line off the lows back here from earlier in the month, the first leg up, and you can see this is what a convincing a high probability sell signal looks like. That's what I call high probability. Big red candle closed way below, and there was more downside to come after that. So that's what we're lacking so far today here, but I'm on watch for. And so there it is. We'll wrap it up here with this 60-minute chart of QQQ again at the for the third time since that top of that bounce target zone was listed about 188.37. We're there again. 1, 2, 3. You can see so far today. One can certainly argue whether it's going to be taken out or not. That's your opinion. But one cannot argue that that is not a significant technical level. You can see all day. Look at these 60-minute candles. We're on our third 60-minute candle. Intra-period pop doesn't mean much. It gapped up. There was a lot of momentum going into the move up this morning. And so again, we take it out. We took it out once before by a slight margin on a same thing, a momentum fueled overshoot. There we didn't have. We had this strong rip, this candle that carried us through there with the momentum, and then we traded around there and then failed. So if we pop it again, like I said, there's a little more upside in SPY and ES before you hit that resistance level, and the top of the bounce target zone there is 294 on SPY, so that would be it. And then anything above there, it certainly starts to chip away at the bearish gates. Even, I'll tell you, since Friday, the fact that we, the bears didn't take it and run right here when they came so close to taking out those previous lows. For the market to rally back up again at this point, like I said, it does chip away at the bearish case, because it's not, as I started the video with the daily charts, it's not the ideal corrective price action where you have an impulsive move down, oversold, near-term oversold, snapback rally, and then the next leg down. At minimum, an ABC should look something like that. This kind of muddles up the charts, and therefore, like I said, it certainly chipped away. So while I can say this, it is objective to add on bounces back to resistance, and of course on a break of those 60-minute trend lines. But right now, it's not the highest probability entry. In other words, my convictions are a little less than they were back here the first two times we bounced to this level. I can say that now, if that makes any sense to you, that my convictions on this happening are a little less, just due to the fact we're still here in this trading range, and the bears couldn't take it down at that point. But so we'll take it from there. Let's see how it plays out. I'm still favoring that scenario. I'm just favoring it a little bit less than I was, at least in the very near term, than I was a couple weeks ago. But right now, this market has a lot of overhead resistance to overcome, and at this point in time, I'm going to watch to see how today resolves, and we'll pick it up and go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.